Welcome to our deep dive into one of the world's most influential private equity firms. Texas Pacific Group, now known simply as TPG, has reshaped industries from travel to tech. Founded in 1992, TPG has evolved from a boutique investment shop into a global powerhouse. Today, they manage a massive portfolio that spans the globe, influencing the way we fly, eat, and use technology. For entrepreneurs and investors alike, understanding TPG's trajectory is a masterclass in capital allocation. In this video, we will explore their history, their most famous deals, and their current standing in the global market. Let's look at how three men built an empire from the ground up, starting with a bold move in the airline industry. TPG didn't just start big, it proved its worth through one of the most famous turnarounds in history. Founded by David Bonderman, James Coulter, and William S. Price III, the firm made its mark in 1993. At the time, Continental Airlines was struggling in bankruptcy. TPG took a massive risk, investing $66 million into the airline. This wasn't just a financial injection, it was a total operational overhaul. Their strategy worked perfectly, and the investment eventually yielded a massive return for their partners. This success established TPG's reputation for complex turnarounds, showing the world they weren't afraid of distressed assets that others might avoid. TPG's success lies in its diverse and disciplined investment strategy. While they are masters of the leveraged buyouts, or LBO, using debt to acquire companies, they also focus heavily on growth equity. They look for companies at a critical inflection point, providing not just capital, but also the operational expertise needed to scale rapidly. Beyond traditional buyouts, TPG has expanded into venture capital and real estate, ensuring they have a hand in every stage of a company's life cycle. Their approach is data-driven and global, allowing them to spot trends before they become mainstream. This multi-asset class strategy is what allows them to manage billions across different market cycles effectively. If you look at your phone or your kitchen, you've likely interacted with a TPG-backed brand. They have an uncanny ability to pick winners early. TPG was an early investor in Uber and Airbnb, recognizing the potential of the sharing economy long before it was a household concept. But they don't just do tech. They successfully managed the turnaround of Burger King and have held significant stakes in Spotify and J.Crew. By diversifying across technology, consumer retail, and media, TPG ensures its portfolio is resilient. Each of these investments highlights their ability to either fuel rapid growth in startups or revitalize mature brands through strategic management and capital restructuring. To manage such a vast array of investments, TPG operates through several distinct business segments. TPG Capital is the flagship, handling large-scale buyouts that often make headlines. TPG Growth targets smaller, mid-market firms with high expansion potential. However, one of their most innovative segments is the Rise Fund. Launched in partnership with Bono and Jeff Skull, the Rise Fund is a leader in impact investing. It focuses on achieving social and environmental impact alongside competitive financial returns. This tiered structure allows TPG to be agile, whether they are buying a global airline or funding a small social enterprise in an emerging market. The scale of TPG is truly staggering. As of recent filings, they manage over $220 billion in assets under management, or AUM. This capital isn't just sitting in a bank, it's deployed globally through 19 offices across the world. From their headquarters in San Francisco and Fort Worth to major hubs in London, Hong Kong, and Mumbai, TPG has a local presence in every major market. With over 900 employees, including hundreds of investment professionals, they have the manpower to conduct deep due diligence on a global scale. This footprint allows them to source unique deals and provide their portfolio companies with truly international support and market access. For most of its history, TPG was a private partnership. However, in January 2022, the firm reached a new milestone by going public on the Nasdaq. Trading under the ticker symbol TPG, the initial public offering was a major event in the financial world. Going public allowed TPG to raise additional capital, provide liquidity to long-term employees, and use its own stock as a currency for future acquisitions of other asset managers. It also increased transparency, as the firm now has to report its earnings to the public market. This transition from a private club to a public corporation marks a new era of institutional maturity for the firm. As we look to the future, TPG is positioning itself as a leader in the next generation of investing. They are doubling down on ESG, environmental, social, and governance criteria. Through their rise in climate funds, they are proving that private equity can be a force for good. They are heavily investing in renewable energy, healthcare access, and financial inclusion. Managing over $220 billion into the next decade, TPG aims to solve global challenges while still delivering the high returns their investors expect. For entrepreneurs and investors, TPG represents the modern face of finance, sophisticated, global, and increasingly conscious of its impact on the world. Thanks for watching this breakdown of Texas Pacific Group.